In this video, I wanted to cover the top 5 ETFs that are dominating the UK market right now. These aren't just any ETFs, these are the funds that UK investors are actually buying and holding right now. So let's go through each of them in turn, and we'll cover what returns the investors have been seeing, why they are so popular, and then you can decide if they're right for you. I will also cover which of these funds I hold and why. So for those newer to the game, an ETF or exchange traded fund, it's like a basket of investments all wrapped up in one. You can think of it as instantly diversifying your money across potentially hundreds, sometimes even thousands of companies with just one purchase. They're low cost, easy to trade, and can track everything from an entire stock market to specific sectors. And in the UK, certain ETFs are consistently topping the popularity charts. Today, we're going to go through the top 5 ETFs purchased by UK investors, breaking down what they are, their rate of returns, and why they're so popular. Let's count them down.
To number 5.
So coming in at number 5, we have the iShares Physical Gold ETC, ticker SGLN. Now, technically, this is an ETC or exchange traded commodity, but for our purposes, it acts very much like an ETF. So what is it? Well, SGLN tracks the spot price of gold. Essentially, it's an easy way to invest in physical gold without having to store gold bars under your bed. In terms of returns, over the last year, SGLN has returned around 40%, and over 3 years, it's returned around 68%. It has an expense ratio of 0.12% and a 3-year volatility of 12.65%. Now, just to clarify what volatility is, the level of volatility of returns is a measure, and percentage terms, it provides a good indication of how variable annual returns are and makes it easier to compare funds. For example, if two funds that you're comparing have identical annualized returns, the fund with the lower volatility deviation would normally be more attractive. So why do people buy it? Well, in times of economic uncertainty, like we've seen more recently, gold is often seen as that safe haven. Investors tend to flock to gold when they're worried about stock market crashes or fluctuations or indeed volatility. It's used as a portfolio diversifier and can often hedge against or perceived to be hedging against risk.
Down one at 4.
And coming at number 4, we have the Invesco EQQQ NASDAQ 100 ETF, which is ticker EQQQ. This one's all about tech and growth. What is it? Well, the EQQQ tracks the NASDAQ 100 index. This index is full of 100 of the largest non-financial companies listed on the NASDAQ stock exchange. You can think of the tech giants like Apple or Microsoft or Amazon and Google. In terms of returns, EQQ has delivered a strong set of returns, approximately 28% over the last 12 months, and over the last 3 years, around 57%. In terms of expense ratio, it's an expense ratio of 0.30%, and volatility-wise, it sits at 17.63% over the last 3 years. But why do people invest in it? Well, investors buy EQQQ to tap into that growth potential of the technology sector. The NASDAQ 100 is a hub of innovation, and many believe these companies will drive that future economic growth. It's for those that are quite bullish on technology and are willing to accept higher volatility for higher returns.
And up 10 to number 3.
And moving up to number 3, we have the Vanguard FTSE All World ETF, ticker VWRL or VWRP. If diversification is your goal, this ETF is a strong contender. What is it? VWRP or VWRL aims to track the FTSE All World Index. This index covers both developed and emerging markets around the globe. We're talking exposure of thousands of companies, big and small, across the entire world. It has provided solid global returns of around 23.4% over the last year and 37.3% over the last 3 years. It has an expense ratio of 0.22%, and its 3-year volatility has been 10.73%. Due to its broad diversification, it tends to have moderate volatility. So why do people buy this ETF? Well, it's seen as a one-stop shop for global equity diversification. It's incredibly popular for long-term investors who want that broad exposure without having to pick specific regions or countries. It's a core building block for many portfolios.
Up Up 6 places to number 2.
Taking the silver medal at number 2 is the iShares Core MSCI World ETF, ticker SWDA. Very similar to VWRL or VWRP, but with a slight difference. So what is it? Well, the SWDA tracks the MSCI World Index. This index focuses on developed markets only, so think USA, Europe, Japan, etc. It's still globally diversified, but with a focus on established economies. And SWDA's 12-month return has been 24.4% and 42% over the last 3 years. It has an expense ratio of 0.2%, and the volatility over the last 3 years has been 11.42. So similar to the Vanguard ETF we mentioned earlier. So why do people invest in it? Well, like the Vanguard All World ETF, SWDA offers that excellent global diversification. Some investors prefer SWDA because it focuses on developed markets, which are sometimes perceived to be less risky than emerging markets. It's also another very popular holding for long-term growth, and of course has that lower expense ratio.
And Britain's number 1 for the second week running.
And finally, taking the top spot, the gold medal, the most purchased ETF in the UK in January 2025, it's the Vanguard S&P 500 ETF, ticker VUSA. What is the VUSA? Well, it tracks the S&P 500 index, the benchmark for the US stock market. It gives it exposure to 500 of the largest companies in the United States. That represents a huge chunk of the global economy right now. VUSA has delivered a strong return of around 29.2% over the last 12 months and 50% over the last 3 years. Its expense ratio is really low at 0.07%, with a volatility over the last 3 years of 12.52%, which is broadly in line with the wider US stock market over the last few years. And so why do people buy it? Well, the US stock market has historically been a strong performer, and the S&P 500 is seen as a key indicator of global economic health. VUSA has got incredibly popular over the years. It's simple and low-cost way of tracking the US economy, and for many, it's a cornerstone of their investment strategy. So there you have it, the top 5 ETFs UK investors are buying right now, from gold to global diversification to US tech giants. These ETFs offer quite a range of investment options. But remember that past performance is not indicative of future results, and all investing involves a certain element of risk. So which of these ETFs do I hold? Well, I hold the Vanguard FTSE All World Index Fund. I touched on the benefits of this fund earlier on. Its broad global diversity makes it a good option for passive investors, and it forms part of my longer term investment bucket, meaning it's got time to weather that short-term volatility the market tends to throw at us. So which ETFs are you invested in? Is it any of the 5 I mentioned? Let me know in the comments below. And if you found this video useful, please like and subscribe, and click on the notification bell to be advised of the next video. Thanks for watching.